Hello. Okay, first things first. I'm 2 minutes too late. We did try to catch a beautiful short here, but our current target is to see if they can tag this thing. Let's do this actually. Remove all drawings just for now. So when we're looking at this small pocket in price actions, what we're doing is we're just making reference to the 3 previous hours. The first hour, 7 o'clock to 8 o'clock, and we're just about to enter 9 o'clock, which is beautiful, and we just left 6. So we're not working with much now. We don't need a lot on our charts, but what we see first is we see buy side getting tagged right here. We have buy side getting tagged right here, and within the previous hour we still have sell side here, which is our potential drawn liquidity hashtag target. Take it to the left. Change this color. There we go. Take this to blue. Take this to blue. So this is already kind of the high of what I believe is the high for this hour, the one that's printing between 8 to 9, and we should see it at least raise below sell side. The deepest we can go is most probably this right here, which is the first inefficiency post 6 o'clock, so post 7 o'clock. So this is the lowest I'm expecting it to go. And if you do look here, you see small sell side liquidity resting right below there. So this is basically my low hanging fruit. Put it in the middle and change that to that. So right there. So you can go short at any time. I would have been short even now as well. So what I'm doing now is I'm tape reading, right? And the goal of tape reading is we're trying to get in sync with the financial market. You know, we're trying to, first things first, get a sense of, it's a bit of a wide stop. Let me see, calculate from here to there. It's not that wide, it's just 31 handles. And we're trying to target 16. This one is to 2. I don't really care though, in my opinion. Anyways. So what we're trying to do is we're just trying to get in sync with the financial market. We're not really trying to get any winners or any losers. That's not the goal here. The goal is, can we read it right? Are we in sync? And can we spot a potential model for us to go short and profitable on, which is right now. We went short at exactly 0836. So this is when we went short. Our stop loss is just above here. And we're trying to see low hanging fruit right there and then ultimately target right there. So we should expect spooling at 0840 heading into 0842. So the last 20 minutes we should see at least a bit of spooling to the downside. Excuse me. So the goal here, first things first, and if we don't see any lower prices, then we should see it at least sweep this lows, and then we should see higher prices, most probably targeting obviously these highs right there, which are very smooth and relative, which were made in the London session, which I do see it, honestly. In my opinion though, I really want them to run sell side first before they run sell side. Apologies, before they run buy side, but we'll see. So we just want to see if they can clear all these, ultimately clear all these babies here. See that? It's very nice, relative equal highs here, just waiting to be cleaned. most probably later on in the session. So, but for now, I do think they might run it lower one more time. If not, then this is the low of day, and we should see it gravitate throughout the PM session targeting those highs, which I don't think is the case. If we do see that, then apologies. I misread the financial market here. Which I don't apologize for. Excuse my French. So what you're going to notice is I'm not going to move my screen much. There's no need to. I don't care the color of candlesticks, in my honest opinion. I prefer them all being black. Yeah. So it gives me just a sense of where all the inefficiencies are. The first one that jumps at me is this baby here. So we should see it make an attempt hitting into 440. So from here, we should see spooling in one direction, preferably lower. If we do see it spool higher, then okay, get stopped out most probably. And this is the retracement now, and we should see higher prices from here. Right there, barely touched 50% of this whole extension leg, and we should see it continue to gravitate higher and at least target this baby. She looks very suspicious. Suspicious. Right, there we go. Thank you so much. Can remove these, don't need that. Okay. So we should see it spool in one direction, preferably lower, of course, but it's time. Yeah, I need to fix that. Jim, I need to fix that. So what I want you to study heading into next month, we will be doing a lot of live session, is every time you have an hourly open, I want you to watch the first inefficiency that forms. So this is the first inefficiency right here. This baby there. That's what my brain is watching for now. I introduced you to the 3 a.m. one, so watch that. There's so many. You can watch also the 8 a.m. one, which is beautiful. So this is what we're in now, the first inefficiency there. Bam, we're trading into it once, twice, and then exactly 440. We should see a continued price run in one of either direction. What do we have here just below sell side as well? The first inefficiency. Preferably, I would prefer not the one at 0 o'clock. I prefer this one, but you can use the 0 o'clock one. Preferably, I would prefer this baby here. This is what my brain would prefer, just based on experience. You can use the 0 o'clock one as well. It doesn't really matter, but just for now, I prefer this baby right there. So we see that. So now we want to see, does the market trade from this point of fair value to that point of fair value within this delivery schedule? Then what do we have here as well? The first inefficiency post, 6 o'clock. You can use that one or this baby right there, the small one here. Even this as well, but preferably I would use that one or this one. But if you extend that to the left as well, it's in close proximity to the 7 o'clock one. So that's kind of what my brain is watching. And my brain keeps track of these, the first inefficiencies, and seeing if price wants to either gravitate away or to or from these levels and what liquidity rests below those, you know. So here the only reason maybe you might not see it get here is because, you know, we swept sell side right there, you know. But, excuse me. So here we're just trying to get in sync with the financial market. Nothing much, so whether we're wrong or right, that's not the goal here. The goal is to get in sync. And many people don't have this when they come into trading the financial market. Their goal is, can we be right? I want to be right. I want to hit my target. I don't want to be wrong. But the goal is, can you read it? Can you read the tape? And you need to do this. What we're going to be doing tenfolds for the whole of February. Let me just hope I'm not on mute there. We're going to be doing this for the whole of February, where we're just going to live tape read, live price action. Obviously, we have a news event later on today, so please be cautious. But this is the goal, you know, to tape read, having the ability to watch the market print and predetermine where we're going to expand relative to your current dealing range or the level you're currently studying at. So we're just 4 minutes into the 840 candle. I knew I had a feeling I was on mute. So we did see a beautiful expansion lower. And I want you to notice the first place for it to stop right here. And right there. Yeah, this is NAS 100, so it's a bit off relative to NQ, so not really the best. And if you were looking from that inefficiency to that first inefficiency, your model would have already been delivered. And from point of entry, right there, to where we are now, it was a beautiful 29 handle. My 20 handles would have been hit already, which is here. Got a nice, beautiful spooling lower. And yeah, we should see a bit of continuation seed race. Hopefully I'll get a body close below this, which will signify lower prices and then ultimately sweep the lows. But this is what we're going to be doing for the majority of the 2024 calendar year, 2026 calendar year. Especially for February, where we're just getting in sync with the tape, being able to read it with the utmost of efficiency. So here would have been your first partials, just below low-hanging fruit. So one thing you must realize, if you're unable to do this, where you just tape read, you're not in a trade, you're not making money, you're not losing money, right? You're just watching it play, watching areas of interest, and you execute it. Post 8 o'clock. It's beautiful price action, I'm not gonna lie to you, hey? Pretty nice. So obviously you could have taken partials right when we hit lows. But personally, I don't really care about my stop loss placement in terms of moving it. You can, preferably I want to move it once we get a body close below here, because we can retrace back to that inefficiency, maybe even as high as this, which I won't want to see, of course, but And if this is the low, I would understand it's 0545. So if we do engineer potential swing low here, and the next few minutes rally higher, then this might not play fair value. So you'll want the next 2-3 minutes to really make an attempt for that low. Ultimately that, of course, then you're done for the day. Hope I'm not on mute here. Because I know when we spill in sauce, that's when out of nowhere it decides to be on mute. But the goal this year is simplicity. We're not here to complicate things. What I'm going to do, my main area of focus this year, it will be the first inefficiencies post any hour. I'll obviously give you a sense of what my favorite ones are. My favorite one is the first one, post 03 in London, which is my favorite one. There are a few others. We do have Redfall, the news event today, so geez, the market might be a lot more fickle than we want it to be. So, and also notice how out of all areas for the market to pause after that drop, it's here. What's that? When you go to the far left, it's the first inefficiency within the previous hour. This is technically the second if you're looking at it from that perspective. So, but we did touch that, hence I was focusing on that. But the goal is to focus on the first inefficiencies of any given hour and use those to formulate execution and entry models. So majority of my trades, you'll notice, they'll be within either the first inefficiency post, almost at market open, post midnight open, and then the second one is 3 a.m. So we already stripped outside, but I just want to do this just so you have a sense of what we're working with. This is what my brain sees. So you see that we went right from here, right there to here. And this is complete. Beautiful. And if we do raise high and take out buy side, I'll know why, So that's kind of what my brain, from that inefficiency to that. Preferably, I would have preferred it lower, of course. So if we are in sync with the algorithm, then this should play for lower prices. If we do see any higher prices, then I'm most probably wrong. And I do understand why, of course. We are within a wearable. There we go. So this is the first inefficiency post this drop. So we should see, if it wants to melt lower, we should see a continuation just to sell side there. If not, then this is the low for this. That's okay. There's a very specific reason I'm deep reading and not really trading today, because we have these retracements that not necessarily you don't want to see, but the market is waiting for something, and it's the news event. So I wouldn't pyramid here in any shape or form. On any other given Sunday I would have, but not today. So when studying the first inefficiency post a certain hour, what you're basically looking at is the first area of focus for point of fair value, in my opinion. And that's not the best price, of course, but it's a nice reference point for you to focus on. It's a constant variable, and you can build successful edges around them. And you don't need much, you just need the previous 3 hours range in order for you to formulate an idea relative to what time and how large is the first inefficiency of every single hour that prints, which is very important. So as expected, told you not to really move your stop in any shape or form. It's a very fickle market. My brain is not really explosive enough. I don't think so, to really make an attempt for 830's high. I feel like they're gonna run the lows first, but maybe not. Should check on higher time frames. See, on higher time frames, it doesn't give me not bullish signs, but at least a sweep below the lows before continuation. That's kind of what my brain is seeing. If not, then just run back up. Basically, you can't really crowd the spilled milk. We do have a bit of fair value there. I obviously want to see us blast through that. But anyways, when you're executing, what's very important is you're not fearful, because first of all, you're not over leveraged. Second, you know it's going to repeat itself. And third, when you're wrong, you know why you're wrong relative to the same model you used to execute, whether you bought short or you went long. So if this plays the low, then obviously we're wrong. So this will be the swing low, and we should see continuation spooling. When we do, if or when we do take out the slow, then that's very bullish, bearish signs, apologies. If we don't, that's bullish. Don't want to see that. So when you're wrong, you understand why. Like, for example, let's take this practical example. I know I'm in short at 0836, regardless of whatever happens within the financial market. And I'm constantly evaluating whether I'm on side, and I'm still, if we're still going to my TP, which is ultimately here, and my stop losses remain stagnant, hasn't moved in any shape or form. And I'm watching potential areas for retracements and reversals. First area, of course, is the first inefficiency, right there. So as soon as we traded into those, we had our first measure of retracement. Went as low as the one I was studying, which is beautiful, and we swept sell side right there, which is clean. And we have our first measure of retracement. In my opinion, obviously, I believe just end here. I don't, it could even go as high as that, but we'll see. As the market begins to print, we want to just see it continue low for the first 15 minutes of the clock, and most probably by 9:30 we're already below here and we're sweeping it for higher prices. We'll see. But as soon as we trade it into here, we have our first measure of retracement. Now, the question in my brain is this a retracement or a reversal? And I'm looking for those signs, and so far it feels like a retracement. It could be not a reversal, and that's okay. That's why you were wrong. I'm wrong when I misinterpret reversals for retracements and retracements for reversals. And this area, you could use it as a potential entry model for longs in the near future, studying the same conceptual idea of looking at the first inefficiency post specific time, which is any hour you're watching on a 1 minute chart. So it's a very constant variable, never really changes. It's just your analysis of it, your awareness of where it is, your misinterpretation of it, and whether you can identify we're going to go higher or lower. I told you the reason why I believe we're going to go higher overall, just because of these two babies right there. We could see lower prices because I want to see them sweep sell side first before targeting these highs. And that's basically it. So if you see these nice expansion higher, that's what it's going for. And these lower time frames are getting in sync with that. But before they do that, we need time to hit, which is usually an equity open, lunchtime, a session open, session kill zone, if you want to call it that. Definitely feels wrong. We'll see if it will continue to run higher and chase this inefficiency right there. But that's basically the gist of it. And you mark from here to there. If you were looking for most potentially longs here, once we sweep that sell side from there to up here, it's another 2900. It's the same basically. Could go short just to go long as well. From that inefficiency to that inefficiency. So when we trade back into it for the second time, that becomes low probability for me. I don't really want to engage in it in any shape or form, because it already performed its function here. So I'll keep an eye on this inefficiency. I wouldn't pyramid in any shape or form. So I wouldn't go short here, in other words. So I want to see if this inefficiency right here will allow for any lower prices. Yeah, we traded a bit high into this inefficiency than plus I would have loved for us to be done by this. So we've done that first retracement again from this inefficiency to that inefficiency, sweeping buy side, sweeping small buy side from point of fair value to point of fair value. We should see it raise for that low, but not on the new term. Excuse me. And obviously, I'm not gonna talk much, man. Like, there's nothing for me to talk about when the chart is not really moving in any shape or form. But the main goal for this year is read the tape. That's the goal. And time. Focus on time because that's the only thing that can save you. Your goal is to make $500 a month, and that will be my sole focus for the whole year to get you to that point where you can make $500 per execution, which is usually just 35 handles on any given execution. And if you're using one micro, it's freaking cool. It's cool in my opinion. So that's basically the gist of it. So notice how we've point of fair value, point of fair value, point of fair value, point of fair value again. So we should see it race in one direction, preferably lower, in my opinion. If we do see any higher prices, that will piss me off. But that's our goal, man. Our goal is to be able to do this, and I obviously chose the worst market conditions just to read so that you can be in those uncomfortable positions where it's not really running to your favor, but you know it's going to go there eventually. And these are the places where you either do too much, you overtrade, you put your stop loss too tight, or you just make mistakes, and it's okay. You'll get to points where the market delivers with the utmost of efficiency. And the only way for you to get to those moments is when you accept your losses and walk away. If you don't, then you'll be stuck in the same cycle. And also, when you're studying this year, especially my trading journal, study my points of reference because they never change. It's a constant variable. The first inefficiency post any o'clock open on a 1 minute chart will always be a constant variable. It will never change. The time might change, but the function is the same. It's the first inefficiency. It's the first one. But yeah, that's basically my sole focus for this year. There's many other inefficiencies you can focus on. There's so many I would love to teach you, but for now I just want you to focus on the first one. And the one that we'll be focusing on is the one that forms 3 a.m., which is the London session. So if you can get that one, that will be beautiful for executing, targeting either the Asia high, Asia low, the current low of the session, etc., etc. And nothing more, nothing less. So we are within this inefficiency. We should see the engineers swing low, 0912 preferably, and we should see low prices heading into 0915, heading into 830. If not, then we're just in a consolidation, and I'm just going to keep quiet. There's nothing much for me to talk about. And yeah, so that's the gist of it. The goal this year is to make your income. Nothing more, nothing less. The goal is to be comfortable with price action and stop wanting to learn. I believe the one mistake we make as executors, especially coming from a background of schooling, we always are being prepared for something. Like in high school, we're being prepared for college. In college, we're getting prepared for work. Work, we're getting prepared for retirement. Retirement at 60, preparing to eat the fruits of our labor. We're always preparing for something, and trading is one thing you don't prepare for. You have to come there, already know what you're looking for, where it's going to form and why. And the majority of the time we are stuck in the learning process as traders. We're stuck in trying to find this, find that, whatever you're trading, crack the algo, doesn't matter, but you're always constantly stuck in the learning phase, getting stuck in the phase of where you're still amused by small fluctuations, where you still think learning this is cool. That's cool and all, but our goal is to make money and be profitable. Like, you could care less about what these candlesticks do, what they say when they say it, but you care about when they resonate with you, where they translate into entry models for you to make money. That's all you care about. But if you don't have those, you're wasting your time, basically. You're fucking wasting your time. And that's not the goal. The goal is to not waste our time. The goal is to make money and the more we focus on, I won't say it's what if thinking, it's more of a, you're just focusing on learning, on not putting the pedal to the metal per se. You still want to discover, still want to find yourself. Though you don't find yourself within the financial market, it's pretty hard. People are still trying. So the goal this year is to get out of that learning phase and more into the practicality. The way I think of trading, it's, think of it like in high school, right? Back in my, I can't say back in my days, because literally high school was just like fucking 7 years ago. So like literally less than 10 years ago. So literally I'm not that old. And what we used to do in English, we used to have unprepared speeches, meaning we used to come to class, and during, I must say during math, during English class, what used to happen is our teacher used to give us almost like a topic to talk about 10 minutes before we speak, and our goal is to make a speech out of that, generate topics, create structure, a beginning, a during, and a conclusion on that specific topic. And it was always random, and that is literally trading, in my opinion, where you're given a topic and you're supposed to make it work. You have skills, your speaking skills, your presentation skills, and your body language, and you do that. So it's pretty fascinating. So now this is where we get to what we call uncharted territory. So it's when we keep bouncing from point of fair value to point of fair value. Why do we do this? We're waiting for time. 9:30. So we should see any form of spool, preferably lower. I could care less whether it goes up or down. I'm not going to look at any inefficiency. Most probably I'm going to keep quiet till for the next 13 minutes, because there's nothing much to talk about. We're just going to be stuck in this range, take out that high most probably, and just get stuck in this consolidation till 9:30. And at 9:30 we'll spool in one direction. In my opinion, judging by the current price action, I think we're going to run higher, where we're going to use 9:30 just to make an attempt for this suspicious high, and not really sweep sell side. But since I'm in short, let's almost said fingers crossed, basically gambling. We'll see if we do take out sell side instead today, which I highly doubt in my opinion, just based on current price action. Yeah, that's basically it. Just 40, just we're expecting spooling. So in my opinion, I am expecting obviously target to sell, hit the sell side in the next 30 minutes. So I'll be awfully quiet. I won't talk much. And yeah, that's basically it. Unless you guys want to hear about my life story about where the fuck I come from, um, and stuff like that. I've been with you guys for 44 minutes. When you're in these price action, this is where, in my opinion, kill it. You know, if, for the first drop that occurred, that's beautiful. 30 handles, that another 30. And when you get these retracements where you do see spooling but not really continuation, always check the economic calendar. Those are not random. They don't just happen, those are engineered. And these give you signs of whether to stay out or trade, get in the financial market. And when you keep seeing these signs, it's best to stay out. It's best, even if you make money, it doesn't matter. You know, half the time you're so uncomfortable. You know, we were in this for like 40 minutes and we've only moved like 30 handles in a range. You get what I'm saying? So is the lemon worth the squeeze for 40 minutes inside a 30 handle execution, expecting it to yield 60? Is it worth it? You need to ask yourself these small questions. And they're very important in the grand scheme of things because, first of all, they gauge your emotional elasticity, meaning, are you regulating your emotions? Are you being aware of mental capital being spent the more you're in a trade? You know, the more it goes against you, to get frustrated. The more it goes in your favor, are you happy? You know, like all those small quirky things. Because here we've engineered sell side liquidity, in my opinion, is free freaking money. Note here, free money. So you need to know that, you know. Because if you can't sit in such price action and not trade, just watch it print and notice when your emotions arise, whether it's worth it, whether it's not. And also, you know, in my opinion, we should see at least a standard deviation if we do raise below that low, in my opinion. So we should see it at least raise for land. At least. It's not too far-fetched, but we should at least, if we're going to raise that low. If not, then obviously we're going for those highs, baby, all these. But that, I don't see why. If we take out this low, of course, that, then we should see for the whole day just give ghost. We'll see. We'll see in the next 9 minutes. So obviously I told you my thesis for 9:30. I'm going to keep quiet now. And this will be us every day. For 1 hour though. We're going to have my whole time. Just for 1 hour between 3 to 4 o'clock. We're just going to sit, watch the first presented inefficiency post 3 a.m. and how the market uses that for either entries long or short. And whether you like those entries or you don't. That's basically the gist of what we're going to be doing the whole of next year. The whole of this year, apologies. I'm a bit fatigued. I have a headache today, so apologies if I'm speaking out of context. I sound a bit lethargic. It's because I am. It's because I am. It's because I am. So just 2 minutes left. It's obviously going to be fast. It's going to be fast. But yeah, so we are between two fair values and we're waiting for time. And I told you already that I'm looking for lower prices, nothing more, nothing less. And obviously, the reason for lower prices, I think I explained it the whole time as we're executing. And we've cleared buy side, we've cleared buy side, but we just left sell side untagged. We just barely swept sell side. So that's basically the gist of it. Just 1 more minute left. So what happens is when you're not anxious, you know what type of profile you're in. As soon as we had a much deeper retracement, it's pretty evident we're in a consolidation waiting for time. It's nothing much for us to talk about, but the consolidation is between point of fair value and point of fair value waiting for time. So it's pretty cool, eh? So what you want to see 9:30 do, you want to see it wick into this and then rip lower and take out that. You don't want to see it like just start running. Then obviously we're wrong. Mr. Rapid Repricing is wrong. And why would I be wrong? At this point of fair value? You see? So preferably, let's say if we here, you want to just see 1 week and then lower. But what you want to see here is between that fair value and this, at least 50% of that, from that to that. Just want to see it open there and then run lower. That's what you want to see. Obviously, so we've cleared free money. So this is where you would have taken more partials if you're still short. I would have preferred a deeper run lower. So we have traded into fair value right there. Not as deep as I thought we were. So the next, you should see it obviously hit target. Hope I'm not on mute. So notice now that time hits, that's when price is spooling in one direction. Hashtag rapid repricing. Jokes. As my mentor would say, bagged and tagged, baby. So target has been hit, manhandled. You should see it expand lower. And probably engineer the low of day before running higher. But basically the gist of it, I will upload a tape reading session. Oh, I'll upload a tape reading session. I'll upload this on my YouTube for tape reading purposes only. For study purposes only, not for tape reading purposes only. But yeah, it's basically the gist of it. And with this, you can replace your whole job every day, every week, and you won't stop. So from point of entry, 90 handles. If we're using that to the 85, it's beautiful. If you captured the whole range, 19, then the whole range from day to day is just a couple of hundreds. Nothing much to work with. So here, that's when you can now move your stop to BE and then maybe hold it for 100 handles if you think it's going to spool. And I told you this baby right there, it's 130 handles. So you want to see it run for that. Then now you can move your stop loss from where it was to break even just about there and see if it's going to run to target. And if it does, then cool, you made your paper more than you anticipated. If it doesn't, then it's cool. It'll stop you out at break even or you close all your profits, so don't stress too much. But anyways, thank you so much for blessing me in your ears, and I'll see you February where we're live streaming every day, every week, and we don't stop. Jokes. But we're going to be putting trades instead of tape reading, but you need to get used to this first, my good. So this right there, that would be a nice short if you can catch that. But Literally, that's what we're going to be doing the whole year. Tape reading and tape reading and tape reading, which is more important than you pressing the button and making money. Anyways, thank you so much for blessing with your ears.